Welcome back. You're watching Stockwatch with me, Julieta Televi, and joining me to take your stock-related questions this evening are David Shapiro from Sasfin Securities and Wayne McCurrie from F&B Wealth and Investments. If you'd like to send those questions, please email stockwatch@bdtv.co.za or via SMS on 41392. David, Wayne, good evening to you both. Wayne, it's a tough day to do TV when the most exciting story was probably Alphaman with record tin outputs. It was a very quiet day on the markets. There wasn't a lot of company news, and we sagged a bit by the close. How would you characterize where we are at the moment?
Boring's not always the worst thing in the world. You know, sometimes it's nice just for the market to do nothing and nothing exciting happening, and you can just relax and chill all day. I was surprised the market actually didn't go up a little bit after the federal chairman's speech, because that was it was certainly less hawkish than what we've had in the past. I mean, it's quite clear. He said the economy is being pulled down by higher interest rates. But I suppose the most important thing is he said the risks look a lot more balanced now, whereas he's always been saying there's risks to the upside on inflation. So we'll see. I think it is tomorrow that the US inflation number comes out, and I think it's this week. That will be a clear indicator of what the market's going to do. So I think if that comes in line, we'll be okay. If it's lower than expectations, the market will go up, and if it's higher than expectations, the market's going to fall. So I think that's the big driving factor. And I think the market, both here and overseas, have been waiting for this speech. I know he's talking again tonight, but also waiting, obviously, for the inflation number.
But it is quite interesting, David, that actually it was sort of taken. So Wayne's saying that Jay Powell's comments were quite positive for the market, but it wasn't taken as such in South Africa. So I mean, it's a sort of a matter of interpretation in a way, divining what he said.
Our market has lost a bit of momentum. I'm talking about the local market, but commodities are up. I think. Jay Powell, to be honest, my biggest worry is that I've been listening to him and I'm starting to fall asleep and I've got to stay awake for the England-Netherlands game. That's my big concern. So, listening to central bankers can be, the word, I never get it right. What's the word that, makes people sleep?
Stultifying.
Whatever. So,
Get out your dictionary, David.
But what I think what the Fed also has as part of their mandate is growth. It's not part of our Reserve Bank's mandate, but it is part of the Fed's mandate is to be concerned about growth and that. And I think that's the concern. And as Wayne said, interest rates are now becoming more of a drag than inflation. So and I think you're getting a balance. So he's hinting towards rate cuts. The markets got it at 70% of September cut and one after that as well. So, and it's propped up the market. Another new high today, very, very strong gains in US markets. And then our commodity market's doing well. I think they're starting to show signs of bottoming. I know we've been harping along this for a long time, but it's going to come when we least expect it. When we give up, then it'll come.
Yeah. Okay. 2 words I can think of for Powell: stultifying and soporific. Maybe that was what you were
That's the one, soporific, yeah.
Okay. Right. Well, on to questions. And a viewer asks about Palantir Technologies. And his question is, please ask your panelists what they think about the investment case for Palantir as a more defensive AI play. One of their biggest clients is the US government. Is my reasoning correct? And it goes as follows. Companies at the forefront of semiconductor chips production have run very hard. This might trigger a pullback soon. Palantir services put the features of those chips to work, enabling it to benefit from the massive investment in semiconductor tech over the long term. Any guidance is highly appreciated. Wayne, do you think that thesis stands?
I think it does stand, but I will be straight up front and saying I don't know enough about Palantir to actually make a sensible comment as to buying the shares. It's not a company I know well. Maybe David knows a little bit more.
Palantir is one of these businesses, I think, that was regarded as a very good AI play. And I think where the government comes in, or the US government, is that they would use the AI technology mainly in intelligence. And I'm talking about CIA type intelligence. I think it's also a cyber play as well. It has done well. Look, it's a relatively new listing. I can't remember when it first came onto the market. It hasn't been around that long, and but it's picking up. I think it's one you've got to watch. It's been quite erratic, but it has in the last year or so been one of the outperformers. I can't remember how much it's up over the last year, but it is one to watch. It's again, it's one of these stocks we don't know much about because it's only been around for a couple of years, but certainly keep an eye on it.
I mean, there was huge excitement, as I recall, sort of in the COVID era. There were lots of interest in Palantir, and then I think it sort of suffered from the rout of 2022, 2023, but it has recovered very strongly over the last year. But maybe Wayne, you have consistently said that you'll start seeing increased competition in AI. So NVIDIA will get knocked off its perch. But how long do you think that might take for such things to happen? And especially for those who are concerned that they've missed the AI bus and think, well, should I be buying an NVIDIA, for example, now?
Look, these are fantastic companies. This is not the dot-com bubble burst where the companies just disappeared. So the worst thing that can happen here, and it is a bad thing, is the share price can fall. There will be stiff competition, but maybe as a little bit of an aside, but still related to it, conditions for companies like the Magnificent Seven and Palantir and many others over the last 12 years cannot get better. In other words, I thought when these companies fell in the 22-23 time period, it would take a longer time to recover because interest rates, the structural interest rates are significantly higher. But we must understand that since, I suppose, the last 10 years, conditions could not be better for growth stocks than what we've had. So going forward, those conditions are unlikely to persist, irrespective of what these share prices have done. So they can still outperform, they can still do well. It doesn't mean they're going to collapse, but lapping the field might be significantly more difficult going forward than what we have experienced over the last 10 or 12 years.
Yeah.
You must remember the base gets bigger, and that's the problem. As you grow your base, so it gets bigger. So it's almost impossible to expect them to keep up the same levels of growth. In absolute terms, of course, they're growing and growing nicely. But I still think there's quite a bit to go. But quite a bit, we're not talking years. We're talking, you can afford another 6 to 12 months before you really have to worry about it. If you tot up the amounts of money that are being spent positioning companies for AI, and the whole supply chain around that, it's in its infancy, and I think this is where the market's getting its it's getting its momentum. Just my stock pick is Meta, and if you see what Meta is spending on chips, these are phenomenal amounts, and they've got the money to do so.
Yeah.
They're not struggling. They don't have to go to the bank and borrow.
Yeah.
It's just being generated by their businesses. So they got the power to position themselves for this kind of growth.
Yeah.
So,
okay. Well, maybe we'll get back to
it. As Wayne says, you're in the sweet spot at the moment. But as we know from history, these things never last. They never go on in perpetuity.
Nothing goes on. But just on this Palantir versus NVIDIA, NVIDIA's price earnings ratio, and I know PE ratio is a blunt tool, but NVIDIA's price earnings ratio is 80. Okay, Palantir's is 220.
I was going to ask the question. I'm not sure they're making money. I don't know if they're making money.
Well, they're not making much money at a 220 PE ratio.
Yeah. I think that's why you've got to watch, give it time to develop its product and also its market share and so on and depth. But the technology is good.
Yeah. Okay. Moving on to fintech, and a viewer says, what is the panel's view on the likes of Visa and MasterCard? There was hype about how fintech would disrupt the industry. Has that played out? And which fintech players would be better investments at the moment? They haven't really lost their dominance.
No, we brush that aside. We think, oh, Visa is the little card that you've got in your back pocket or you put in your wallet and you tap and go. It's far greater than that. Because not only are they providing, those two companies have got what Buffett would refer to as the largest moat in the world. Because you can go anywhere in the world with a Visa card. You can't go with, I don't know, I'm trying to think of a bank, an African bank card or whatever it is.
Or actually American Express. You can't go anywhere in the world with Amex.
No,
Amex is a disaster.
It's so expensive, yeah. But I mean, and you can't challenge them. And I mean, but not only are they helping the consumer, but they help the merchants as well. And the systems behind it, the data that's collected, the amount of analytic data that they provide. So I still think they stand ahead. You don't have to go further than MasterCard and Visa if you're looking for a fintech company.
Wayne, your thoughts?
I agree with that. I mean, these smaller fintech players, it's always amazed me. Every person and their dog seems to be into fintech now. The cell phone companies, everyone, the groceries, the supermarkets, everyone seems to be into fintech. So let's call it the smaller end of the market, there's massive over trading here, and there's going to be casualties. But as David said, my view is as well, at the top end with Visa and MasterCard, no one's going to compete there in a hurry here.
So, and something like Apple Pay, and I asked this question in a state of ignorance, to be honest, because I don't know how it, it fits in the whole ecosystem, unless Apple Pay is just an app that will bolster Apple's earnings and rather look at it as a competitor in a payment network.
You still load your credit card onto Apple Pay and onto your Samsung Pay, and still loading your credit card. It's just done electronically. You don't have to carry the physical piece of plastic with you, but you're still using a credit card.
Yeah. Okay.
There are other systems like ADYN, which is a Netherlands company as well. They provide a lot of infrastructure. I nearly knocked my mic out. They provide a lot of infrastructure. But at the end of the day, and they're almost like capital appreciation, I mean, at a much bigger scale. So if you're a company and you need systems that are going to help you use e-commerce and all kinds of other apps, etc., they will provide it. At the end of the day, the machines that they've got, you can still use your Visa card and tap and go.
Yeah.
What I mean? So if you go into you're going to a company and might say 80 and something, but you still use your Visa card.
Yeah. Okay. Wayne, there's a pointed question for you, and that is Wayne said Naspers was his stock pick. I entered them and I'm 7% down. What is the investment time frame for his outlook on a buy? 6 to 12 months? Too soon?
Yeah. Look, I mean, what people must understand is I don't know the future. David Shapiro doesn't. No one knows the future. And probably on average, we are going to get at least 40% of our stock picks wrong. In fact, probably even higher than that. If I knew for certain that I was going to be right every time I picked a share, I wouldn't be telling anyone. I'll be investing the money myself. But, I mean, that maybe sounds a bit like sour grapes. When you buy a share, you're taking a long-term view. You're taking at least a 2 to 3 year view. We're not traders. We're not day traders. We're not trying to make money and get out. If, however, the share gives you that expected return in 2 months of that, and not 2 years, then if you reach your target, you sell the share.
Yeah. And if you have a target.
I mean, maybe as a last comment on this, and I'm sure it happens to David as well, I'm often introduced as an expert in investments. And every opportunity I get, I dispute that fact. There is no such thing as an expert in investment, because if you go to an expert, you expect the expert to get it right at least 90% of the time. And there's no ways we got a hit rate like that. No one.
Yeah.
We're just a little bit more experienced, that's all. So we know where the potholes are in the road. It doesn't mean we're any more knowledgeable than anybody out there. It's just that we've seen all the obstacles and the hoops and everything, so we know when not to jump through them. So that's all. There are no gurus. Believe me, there are no gurus.
There are no gurus. There's no
I
wise.
suppose,
There are a lot of people out there who are asking the questions who know a lot more than we do. Seriously.
okay, well, we'll have to rethink your tenure on the show. But just on Naspers,
yeah.
But just on Naspers itself, it did run hard, and so and that's a. You know, someone says, okay, this is a stock pick, and you get in at the top, and then it retraces, and you think, oh, you feel like the real patsy in the room, having bought at the top. Or would you still say that there's value, and you've just got to take a more patient approach?
Yeah, I mean, when you look at Naspers, I mean, just going back a bit of time, I'm just calling it back here. You know, it did hit the high, and I think when I recommended it, I did say, look, it's at a high now, and it's pulled back to, you know, what you can say to 3,500 from 4,000 in some sort of trading range. But I recommended it on the back of China recovering in a lower interest rate environment. I mean, Chinese inflation came out today. It surprised on the downside. So interest rate cuts are coming there, and stimulation is coming there into the economy. And I think that, you know, it will go up on the back of Tencent doing better, and that's the recommendation.
Yeah.
I mean, when you look at Naspers' valuation, it looks very low in comparison to other companies we spoke about tonight. So I'd still stick with the Naspers. But I mean, I don't know what's going to happen to any share over 3 months.
I've been very critical of Naspers, but I think the new management are holding back. They're not going to recklessly spend money as we've seen in the past few years, which is a very good policy. In other words, stick with the businesses they have and make them work, rather than just selling more Tencent, taking the money, going out and, you know, recklessly trying to buy new businesses. And I think that's one of the positives that we're going to see. So again, you're going to get Tencent probably still being dominant, but the other businesses may be adding a little bit more. The Rand's also a bit of a play. Remember, you convert Tencent at the Rand. You know, we've got the Rand coming down from 19 back to 18. It could improve. So you've always got that conversion, which weighs on Naspers as well.
Okay. Then speaking of buying shares at peaks, there's a question on Novo Nordisk. Do the gentlemen think it's still a buy, or should I run? David, I'll stick with you. Would you run?
No, I'm very bullish on the fatty drugs. Yeah, I still think both Novo Nordisk and Eli Lilly, I still think they're selling whatever they produce. Yes, there's lots of moans about government saying that they're too pricey, but believe me, they're buying factories now to produce what they're, to manufacture what they're producing, meaning the drugs and that. And I still think that this is a real drug. This has got real benefits. This is not a celebrity drug. You know, we get confused with it. So I'm still, and if you watch them, they're just creeping better. And they're dull companies. I mean, if you speak to management, you know, management are not these flamboyant CEOs and that. They're scientists who've been at this for 100 years looking at diabetes drugs and that. So this is serious play, and I still think it's got more to run.
How long will it take? I mean, have they got the patents? I mean, have you got kind of a built-in moat for a few years before you get the?
You've got a big moat. Because other pharmaceutical companies are trying to develop their own drugs, you know, these GLP blockers and that. And I'm sure someone will come, but it's going to take time. You know, it's going to take a long time for these to get the market. And why I say that is Novo Nordisk and Eli Lilly have been in diabetes and obesity for many, many years, ahead of perhaps some of the other companies as well. Okay. So I just, you know, it's like Ferrari. The reason I buy Ferrari is that they sell whatever they produce, you know, and people, and the answer is always look at the second-hand market. So if a second-hand Ferrari sells more than a new one, you know that you can't get the new one. Yeah. It's like the Birkin bags for Hermes, you know, as well. People paying more for a second-hand bag than the new one, because I like that company if the second-hand is costing more than a new one. So I think Novo Nordisk and Eli Lilly go into that kind of category.
Okay. Actually, a viewer sent a question a little bit earlier saying, I don't know where to invest. There was hype around the new that was meant to stir hope in a rally, but it seems to have sort of gone flat. Where do I put my money? Wayne, are you, having a sort of similarly existential question now?
No, look, I mean, I think going forward, I mean, you obviously must always have a well-balanced, diversified portfolio. But, I say this every week, just about stuck record. But if the future is anything like what's happened in the past during a falling interest rate cycle, you would want to slant your portfolio towards emerging markets like South Africa, emerging market currencies like the rand, and commodity shares, excluding gold. So that's where I would slant the portfolio to. But I mean, if you really just don't know where to put your money, you must always have confidence in where you are investing. If you really don't know where to put your money, don't force a decision on yourself. Just sit back there.
Yeah, as you say, boring is sometimes good. A pause is good sometimes. Gives you the opportunity to think things through. I suppose linked to the new rally in South Africa, the banks, a viewer said, are banks still worth a punt? So standard banks come off slightly, but I don't know if it's too late to jump onto the train. David? Talking to Wayne's point?
They've been so well managed. If you're looking for safe, you're looking for a decent return, if growth comes back into the economy, they'll benefit from more transactions, for more M&A, for more infrastructural development and so on. But they haven't let you down, in so many respects. You can't fault our banks. So it just remains a very good set. Even if you look at ABSA, which might be lagging or whatever it is, still, the balance sheets are strong, management's strong. It's all it needs is a little bit of boost from the economy.
Yeah. Okay. And a question that actually came through this morning, sorry, and I'm asking it last, so I apologize, is on Rainbow Chicken. And the viewer said Rainbow Chicken's now listed, share price is under R5. Is it maybe a share to buy and keep for the long term? There's a bird flu outbreak every year, or just about, which might affect the share price and growth. What's the view of the panel? Wayne, I suppose.
You've got to ask Wayne this one.
Wayne's got to ask you because
this is Wayne's favourite, Joe.
Well, a favourite, no, probably. Right?
Favourite, no. This is not a share to buy and hold for a longer term. I don't think any primary agricultural producer is. I don't think any mining share is a buy and hold for the long term. Hopefully, if you're lucky, you can get the cycle right, because these shares can go up. Make no mistake, these shares can fly, same as the fishing shares. But it's too risky. This is not a long-term hold. I mean, we just spoke about Standard Bank earlier on. There's no big risk in Standard Bank, and you're buying it at an 8 price earnings ratio, a 7 dividend yield, falling interest rates with hopefully better economic growth going forward. There's just a far better share to buy, and it's got less volatility. I mean, as you said, Julietta, every year there's a new bird flu out. And every year someone's dumping frozen chicken bits stuffed with brine in your market. No, these are it's not a good industry, this.
Yeah, I feel for them. But I mean, it would be nice, if you can catch the rally when it comes, and it does come, and if you look at Astral Foods, you can make some money.
Yes.
Okay, well, I shall get to your stock picks then. David, you said Meta. Have you got, you're not put off by anything? The share price?
No,
risks, regulatory risks.
We hated Zuckerberg. We used to bash him and Elon Musk, and both those shares have actually come right. And Elon, Meta changed course in the mid-23, scrapped the metaverse and just started to focus on AI for all its products. Facebook, Instagram, Reels, WhatsApp, and he's spending a lot of money improving the services. It's improving its media content, or the way that companies can use those products as well and get to customers. So credit to him. It's I haven't got them, and I haven't bought them for clients and that, but I've been looking at them and just noticing how well they're starting to perform. Musk I won't buy, Tesla I won't buy.
Okay, so Meta, even though it's had a really good run. Wayne, how about you?
As what I've gone for before, PDD Holdings. I mean, one of their big subsidiaries is Temu, which we all know about. But it's not really on Temu being successful in South Africa. I mean, it's so small here, it doesn't even really count. But it's essentially why I'm going for Naspers as well. I think the Chinese economy, the shares just look cheap, and the Chinese economy, I know there's massive problems in the property market, but that's more than likely cyclical. And I think they can really rebound quite strongly in over the next 2 to 3 years. So this is not a 1 week stock pick or a 2 week stock pick. It's a 2 to 3 year stock pick. So hopefully the Chinese economy does recover.
Yeah. Okay.
Pinduoduo. Yeah, PDD, Pinduoduo.
Yeah.
Now, STEM is huge. That and what's it? Sheen.
Yeah.
Yeah, both of them are, I have to say, probably an environmental blot, but I'll keep my thoughts about that to myself. David, Wayne, thanks very much for joining us this evening. David Shapiro is from Sasfin Securities, Wayne McCurrie is from F&B Wealth and Investments, and don't forget to tune into Business Day TV on Thursday and Friday, as we'll be bringing you exclusive content from Standard Bank's Africa Unlocking Africa's Growth Conference that will be taking place in Cape Town. Themes under discussion include South Africa's current business environment, doing business in Africa, and renewable energy, and that is here on Business Day TV. Up next, The Close. Stay with us.